According to CoreLogic, we've just experienced the largest drop in Australian house prices in recorded history. Now, depending on where you sit, that could be seen as a big opportunity or super scary, but we believe we are now in the biggest buying opportunity since the start of COVID, which is why in this video, we wanted to address some of the data and the emotions surrounding the property market in 2023.
For us, we like to get really obsessed at analyzing the data, and CoreLogic does such a good job at tracking everything that occurs in the Australian property market. And what they've indicated is that property prices on the national level have actually been dropping since about May of 2022. Since December of 2022, that rate of decline has actually eased. And in February, property prices only dropped on the national level by 0.14%. Now, we've been noticing this in the market as buyers agents when negotiating with real estate agents and competing against some other buyers in certain sectors of the market.
Pulled up my little piece of paper for this next bit because here comes a little rant for you. When I look at the fundamentals of the Australian property market, yes, there are some super scary and negative things happening at the moment, like interest rates rising at their fastest rate in recorded history. But there's also some amazing things happening in 2023. Now, because COVID is officially over globally, we've got more than 200,000 new people moving to Australia this year, as forecast by the ABS. We've also got over 500,000 students coming back into the country this year, filling all of those inner city apartments in Sydney and Melbourne that everyone was freaking out about for the last 2 years. The unemployment rate is at its lowest point since 1970? Oh, I don't know, man. I don't have a piece of paper in my hands. Well, according to the ABS, it's at the lowest point since 1971. Tourism is back. We're going through an absolute global commodities boom at the moment, which has meant the price of a lot of the beautiful stuff Australia has under the ground in Queensland, NT and WA is selling for premium prices overseas at the moment. As investors, one of the key indicators that we look for is vacancy rates, which are at the lowest level since the last GFC. In Perth, in Brisbane and Adelaide, they're sitting at below 1% right now, which means it is chronically undersupplied. And unfortunately, we haven't built enough dwellings in the last 10 years, and now the entire Australian market is undersupplied from a property perspective as well. Now, with this inflation since the start of COVID, wages in many industries, including IT, construction, healthcare, as well as engineering, have gone up. And the amount of cash in the bank, according to CBA, is now at record levels. And we're sitting at about $1.4 billion of cash or redraw in people's offset accounts.
Now, all that to me sounds extremely positive, but one of the things that I loved and stumbled across the other day was this article from CoreLogic where they looked at the December quarter data for the lending trends. Now, what this indicated was that 99% of mortgage holders actually made their repayments on time. And of that 1% that missed, it was only 0.6 that were past 90 days, and then 0.4 that were between 30 to 89 days. So I guess because you've got all of that cash in the bank at the moment, people are able to make their repayments, and obviously they've got those buffers saved up in their bank accounts at the moment. And the good news is, according to CBA, they're expecting one more 25 basis points rise in the cash rate before we see that decline by 25 basis points in roughly November of 2023. So there is a light at the end of the tunnel with the cash rate potentially coming down.
Yeah, I was reading a cracking article by CBA in the last month, and they were sort of forecasting that between September and December, we may even see 0.5% decline in the interest rate. And then between January and March next year, we may also see a further 0.5% decline. Now, Simon and I don't have a crystal ball. We have no idea what's coming next, but I do believe that there are some strong fundamentals in the Australian economy, and that when this sentiment shift does turn and people recognize that interest rates at 6 or 5% or wherever they end up landing is okay, we're going to be, as Phil Anderson says, potentially off to the races.
And what we're seeing in Brisbane at the moment is a fair bit of demand in certain parts of the market, especially for properties selling below the median house price. And I know this is a story for a lot of towns around Australia. The hard thing is when you look at the data, whatever's happening in Sydney and Melbourne, it looks like it's happening at the national level, but you really need to break it down to your individual city, your individual market, your individual suburb to actually see how things are performing, because we're actually seeing property prices rise in certain areas of Brisbane right now.
Yeah, you're completely right, bro. Like if we look at what's happened in the last sort of 12 months, properties in the higher range all the way across Australia have taken the biggest bath. But many of the properties sub $1 million have actually sat flat or in some locations even increased in value. So like any time in the market, everybody listening to this has a choice point. Now, for many people, the safest and strongest choice at the moment should be to just do nothing, to sit on the sidelines and wait. But for those small number of people that are actually in a position where they can choose what they do this year, meaning that they can actually afford to buy an investment property, then collecting different ideas from people like us and others in the market, like Simon Priestley, Phil Anderson, CoreLogic, Michael Matusik, and all of those other incredible companies out there like CBA and SQM Research, then you might be able to collect that data and get yourself in a position after sitting down with your advisors and making a clear plan to slowly and safely take calculated action and hopefully buy this dip. If this is the largest dip in recorded CoreLogic history, then what an opportunity, knowing that property markets in Australia for the last 100 years have averaged more than 10% per annum. I think all in all, it's going to be a super exciting year with some great potential for those of you that are ready to take action. Now, if you are seriously thinking about buying in the next 3 to 9 months, we would love to offer you a one-on-one strategy session where myself or my brother Simon can sit with you and talk about where you are today, where you'd like to be longer term. We can deeply educate you on the Australian market and the opportunities to pick the eyes out of it, so that you can not just move into the market, but move in with confidence and take advantage of this dip. All you need to do to book that session is go to www.pumpedonproperty.com and we can have a great chat. And then you can either take that with a grain of salt, do absolutely nothing this year or next year, or potentially become one of the small number of people that we work with each month, and we can help guide you into the market and safely get you into an undervalued suburb as we move from here towards the Brisbane Olympics in 2032.
That's a wrap.
That's a wrap.
Getting cool, bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.